When I was a young kid, I thought an edge was something you discovered, like buried treasure, a clever setup, a rare indicator combination, a pattern only a few sharp minds could see. And I spent years chasing that illusion, jumping from strategy to strategy, every time the market stopped rewarding me, quickly convinced that profitability lived somewhere just beyond my current understanding. What I didn't realize then was that most traders don't fail because they lack ideas. They fail because they mistake ideas for edges, and the market is ruthless in exposing that confusion. My early edges looked impressive on paper. They made sense logically. They worked beautifully for short stretches. And then they stopped, not because the market changed maliciously, but because I had never tested whether they were robust or merely lucky. That was my first hard lesson. A strategy that works sometimes is not an edge. An edge is something that works despite randomness, despite drawdowns, despite periods where nothing feels right. I learned this painfully during a stretch where I had what I thought was a near-perfect setup. The win rate was high, the logic clean, the entries elegant. I felt smart trading it. And then variance showed up. Losses clustered. Confidence evaporated. I abandoned the strategy at the worst possible moment, only to watch it recover without me weeks later. That's when it hit me. I didn't lack an edge. I lacked the psychological and structural framework to realize one. An edge is not just statistical, it's behavioral. If you can't execute it consistently when it's uncomfortable, it doesn't exist for you. Over time, through enough cycles, I stopped asking whether a strategy could make money and started asking different questions. Does this behavior repeat often enough to matter? Does it exploit a persistent human tendency? And can I survive the drawdowns it inevitably produces? That shift changed everything. Profitable strategies don't rely on being right often. They rely on being right enough while controlling the damage when they're wrong. They exploit fear, greed, impatience, and structural inefficiencies that don't disappear just because technology improves. Markets evolve, but human behavior doesn't change nearly as fast as people think. That's why real edges tend to look boring. They don't impress. They don't promise excitement. They repeat the same advantage again and again in slightly different forms. One of the most important realizations of my career was that expectancy matters more than accuracy. I watched traders with beautiful win rates slowly bleed out because their losses dwarfed their gains, and I watched traders with mediocre accuracy compound steadily because their risk was controlled and their winners were allowed to do their job. A profitable strategy is one where the math works and the trader can follow the math under pressure. Remove either side of that equation and the edge collapses. I also learned that time is part of the edge. Some strategies exploit intraday emotion, others structural trends, others mean reversion over longer horizons. Trying to force an edge into a time frame it doesn't belong to is one of the fastest ways to destroy it. I had to learn which environments my strategies thrived in, and just as importantly, when to step aside. An edge that only works in certain conditions is still an edge, if you respect its limits. Ignoring those limits turns advantage into liability. Through the dot-com aftermath, 2008, and COVID, I saw strategies come and go, but the traders who survived all shared one thing. They understood their edge deeply enough to know when not to use it. That self-restraint was part of the edge itself. Another truth that took me years to accept was that an edge is not universal. What works for one trader may fail completely for another, not because the strategy is flawed, but because execution is personal. Your temperament, patience, tolerance for drawdown, ability to sit through boredom, all of these determine whether an edge is usable. I've seen simple strategies outperform complex ones purely because the trader could execute them flawlessly. Complexity often hides fragility. Simplicity, when paired with discipline, compounds quietly. And then there's the part no one likes to talk about: edge decay. Every strategy weakens over time. Not all at once, not dramatically, but gradually, as conditions shift and participation changes. A real edge accounts for that. It adapts, reduces size, evolves, or steps aside. Traders who believe they've found something permanent stop paying attention, and that's when the market takes it back. Developing an edge is not a one-time achievement. It's an ongoing relationship with uncertainty. You test, you observe, you refine, you survive. You accept that drawdowns are not proof of failure, only the cost of participation, as long as they stay within expected bounds. And slowly, almost imperceptibly, you stop chasing strategies and start building behaviors that support profitability, patience, consistency, risk control, and emotional neutrality. That's when trading stops feeling like a hunt for secrets and starts feeling like a craft. And as I look back now, decades into this game, I can say this with clarity, earned the hard way. Every profitable trading strategy I've ever used had a simple core, exploited a repeatable behavior, respected risk above all else, and demanded far more discipline than intelligence. And the moment I truly understood that the question, "What is my edge?" stopped being about setups and started being about whether I could execute the same advantage over and over again without flinching when results temporarily turned against me, because that is where edge either becomes real or disappears entirely. And that realization marked the point where I stopped searching for profitability and started building the conditions that allowed it to emerge. Conditions rooted not in prediction, but in preparation. Not in brilliance, but in consistency. And once you see that clearly, you begin to understand that an edge is not something the market gives you. It's something you earn through repetition, restraint, and survival, and it only truly proves itself when you're willing to trust it long enough to see whether it can carry you through the periods where doubt is loudest and the results are quiet. Because that is the only environment where a real edge can reveal whether it actually exists or whether it was just another story you told yourself while the market was being kind. And that question only gets answered when you're prepared to stay with a strategy long enough to find out what it does when it's no longer comfortable, no longer exciting, and no longer immediately rewarding. Because that's where the market quietly separates traders who have an edge from those who only thought they did. And that separation begins the moment you realize that profitability is not about finding the perfect strategy, but about building one. You can execute consistently through uncertainty, drawdowns, and time, and that understanding settles in when you finally accept that the real edge was never the strategy itself. It was your ability to stick with it when the market stopped making you feel smart and started testing. Whether you were disciplined enough to stay consistent when consistency feels unrewarded, because that's the only environment where a real edge proves whether it's structural or imaginary. In the later years of my career, I stopped evaluating my strategies by short-term performance and started evaluating them by behavior under stress. I watched how I executed after a string of losses, how tempted I was to tweak rules, how quickly doubt crept in, and those observations told me more about the quality of my edge than any back test ever could. A strategy that collapses the moment variance shows up isn't a strategy, it's a coincidence. Real edges survive boredom, drawdowns, and long stretches where nothing exciting happens, because they're built on repeatable behavior, not emotional momentum. I learned to measure success by adherence, not outcome. Did I take the trades I was supposed to take? Did I avoid the ones I wasn't? Did I size correctly, even when confidence was low? Those questions mattered more than P&L in the short run, because execution is the bridge between theory and profitability. And most traders fall off that bridge long before the math ever has a chance to work. Over time, I noticed that my best performing strategies were rarely the ones I loved the most. They were the ones I respected enough to leave alone. I didn't optimize them endlessly. I didn't chase perfection. I let them breathe, accepted their limitations, and adjusted only when evidence, not emotion, demanded it. That restraint protected the edge far more than clever tweaks ever did. I also learned that edge expression changes with conditions. The same strategy might trade less frequently smaller size, or not at all in certain environments, and that flexibility didn't weaken the edge, it preserved it. Traders who force their edge to perform in every market eventually destroy it. Traders who protect it through selectivity give it time to compound. And kid, that's the part no one advertises. Developing an edge is not about discovery, it's about stewardship. You don't own your edge, you maintain it. You monitor it. You respect its drawdowns. You scale it responsibly. And you accept that some periods are about defense, not offense. When you do that long enough, something remarkable happens. The market stops feeling adversarial. Losses stop feeling personal. Variance becomes tolerable. You stop chasing what works today and start protecting what works over time. That's when profitability stops being a question mark and starts becoming a byproduct of discipline. And if there's one truth I want you to carry with you, it's this: an edge is not proven in your best month, it's proven in your worst one. When results are quiet, doubt is loud, and the only thing keeping you aligned is your commitment to execute the same advantage again tomorrow. If this story helped you rethink what an edge really is and how it's built, take a moment to leave a comment with your thoughts. And don't forget to subscribe so I can keep passing down the lessons the market spent a lifetime teaching me.